All right, good evening, everyone. You're listening to Red Pill 78. I am the corruption detector, and this is your Red Pill News financial report. Joining me once again is my good friend Bob Kudla from Trade Genius Academy. Bob, how are you?
I'm good, Red. How you doing? Happy New Year.
Hey, Happy New Year to you too, buddy. I'm doing well. So just for people who aren't aware of you or maybe haven't seen this segment of the show before, tell us what Trade Genius is and what they do, how you help people.
Yeah, so what we do at Trade Genius, we educate, we inform, and we provide software and service tools to help people become more effective traders. So we trade the stock market, we trade the Forex market, and we also trade the cryptocurrency markets. And what we do and how we do that is that we have chat rooms, we have trade rooms. They're open 24 hours a day, 7 days a week. We have software tools that we put on a software program called TradingView, where people actually see our algorithm actually put buy signals, sell signals on there. And I shot you over some charts that we'll talk about a little bit. You can actually see where the buy and sell signals are and how they show with the right at the bottoms and right at the top, so people can make money trading on their own when they feel more comfortable. And then we have a whole series of training tools to help people as well. So that's what we do, and we do quite well. And we just grind it out for people every day.
All right, good stuff. Now, is it true that you put together something special for my listeners?
I did. Just like we always do, Red, is that we put a package together, pre-discount it, depending if you're a beginner trader or you're a more advanced trader, you want to trade cryptos, you want to trade stocks. It doesn't matter. We put together 6 bundles for people to choose from, and they could take advantage of these. They're discounted up to 65% for your listeners, but they have to take advantage of it by Saturday. And if they want to buy anything individually, they can use a promo code called Winter, and they get 40% off of any individual item that's not bundled.
All right, great. I will provide that information in the pinned comment and in the description of this video below. All right, cool. So now that people are aware of your bona fides, let's talk about what's going on in the financial markets. For the last couple of months when you've been on, we've been discussing this Fed repo crisis that has been looming over the American financial system. And it looks like we're kind of coming to a head on that right now.
Yeah, it jumped the shark, Red. So it's went from a temporary thing to now it's now intermediate, and now it's going to be permanent. They can't unwind this, because if they unwind it, you're going to have basically a collapse in the stock market. I shot you an article that talked about the Fed is actually considering now going beyond the banks, which goes beyond their mandate, which is technically illegal, but that never stopped those guys before, where they'll actually swap assets that hedge funds own, i.e. stocks, and provide them with cash. What people don't realize is, as the stock market's been going up, people have been exiting the stock market. And 84% of the stocks owned by the top 10%. So it's the insiders are bailing out here on the top. They couldn't in the past, in 2000, 2008, they were able to get the retail investor in on these things, so they took the hit. This time they're either broke, too old, or too smart, and now they're going to be passing it on to the Fed. So there's an article I talked about them. This is what they're doing. They're preparing the patient now for this, and they're going to use extortion like they did before, saying, hey, if you don't allow us to do this, then the stock market's going to crash, and it's going to be on you. And this is no different than what Japan has done for 20 years, what the Swiss National Bank has been doing for the last 10 years. The Fed desperately wants to get into the game of buying stocks. They want to keep this Ponzi going as long as they possibly can. So the repo now they'll call it repo, they'll deny anything, but it's never going to end. In fact, I wouldn't be surprised in the next 9 or 10 years we don't have a double or triple on our balance sheet that the Fed owns, and they own a substantial amount of the stock market.
So what happens when the Fed owns all this private business? I mean, is the goal to just hold it indefinitely, or are they trying to help these companies in some way? I mean, because I've never heard of the Fed buying private stock before. I mean, I'm kind of shocked to hear that. I thought they were only involved with banks. So are they going to expand their mandate? As you said, it's illegal.
Yeah, I don't think they're doing it quite yet. I think they're doing it through intermediaries. And I think they'll get to that point. And I think they're going to push Congress to do that. Look, the only way they're going to be able to keep these pensions alive, public and private pensions, as people retire, they're going to be cashing out their pensions, and they're going to need the stock to be sold, and they're going to need cash. And there's going to be no buyers for that because the population's getting older and poorer. And so they're going to force this upon the public, where the Fed's going to buy these assets. How they're going to buy it, Red, is they're going to buy it through ETFs. They're just going to buy the indexes, which has the same effect as owning them. They're not going to sit on any boards, but as you know, they're going to have incredible levels of leverage and power, to force any kind of societal change they want to mandate by just saying, hey, if you don't play ball, we're just going to not buy your stock anymore, Mr. CEO, Mr. Board. And that'll be like a private conversation at a bar somewhere. And guess what? All of a sudden now Apple's doing this and IBM's doing that. And it's, they're towing the global elite line. And there's no different than Japan. Japan's at a point now where they own 70% of all the ETFs out there already. And Swiss National Bank owns $50 billion of U.S. companies. Can you imagine the Swiss getting in there saying, I don't like the way you're treating some of our approaches to things. We may just sell Apple stock, Mr. Cook. All of a sudden, Mr. Cook now is very amenable to whatever the Swiss want to do. Now, put the United States in the middle of that, and you can see how nefarious that can go. But it's going to happen. It's either going to happen or we're going to get a total crash. And the Fed can't afford that because they know this time all eyes are on them.
So why are we even in this position? I read an article on Zero Hedge, I wanted to pull it up, but I can't find it. It said that 40% of the companies on the U.S. stock exchange are not profitable. They don't make money. So I would assume that means that they're losing money, or maybe they're just maintaining a negative balance sheet for more than a year at a time. But how are they able to do that?
Yeah, I mean, look, in an ideal world, companies that aren't making money shouldn't be public.
Exactly.
But they've allowed it because the insiders always want to push off their garbage to the public. And how this happened, Red, is that it's called the rise of the passive investing vehicle. So people don't buy stocks anymore. Your RIA or your broker, in the past, he'd be sitting there working hard, I need to get him into IBM or this and that. They don't do that anymore. What they've done is to shield themselves from litigation is they do what's called risk and age parameter in terms of their vesting. So like my 401k is managed by an RIA. He doesn't sit there and sweat over what to buy or what to sell. He says, hey, Bob's 59 years old. He's relatively aggressive. Okay, this is his algorithm of what we buy. And then every time money comes in, it's just going to buy to keep that portfolio in balance to those ratios. So what happens is that you have companies like Apple and Amazon and Tesla. Tesla's a $100 billion market cap and can't make money, nor will ever make money. And so what happens, though, is that because it's a large market cap stock, all these indexes are what's called capitalization rated. So it's not like I'm going to buy 1/500th of the S&P 500. The top 10 in capitalization suck the lion's share of the buying. So it gets to the point where you get these 5 or 10 largest companies get to be ridiculously expensive. And then when the selling happens, it just causes it basically to implode. And so that's how it happens. And these guys in Silicon Valley have figured it out. New York guys saying, hey, look, get this thing out there, grow your revenue fast. We'll support it. Don't worry about profit and get on the capitalization train. And that's what Musk has done. That's why he has a $100 billion company. He doesn't care about profits because doesn't punish him. It only matters until it will matter. And that's how we got to that point, because people aren't actively investing anymore. Things that would just scare the bejesus out of people when we had humans involved, the computers don't know any better. It just sits back and says, I have this ratio, I'm staying with the ratio. Until I start losing funds, I'm not selling. I'm going to keep buying. and money's still coming into the stock market. And that's where we're at the point now where it's probably ending. And that's why the Fed now is starting to chirp on this repo thing, because they have to keep it going, Red, or the whole thing just collapse. It's at a point now where it's going to have to accelerate. Okay. And it's going to get really interesting. Gold has sniffed it out. As you know, we're one of the things that we like to trade the most are the precious metal miners, and they've treated us extremely well. I just showed you our favorite stock to trade is PLG. I just shot you a chart on that one. We got it at last week at 170. We got it at 190. 11% trade in 1 week. We've done that now probably 13 or 14 times in the last year. And it just keeps setting up again. And now the miners are starting to move again. So people are starting to figure out, and what the Fed is going to be scared to death about is what we call leakage out of their control. And then food prices, energy prices, and these precious metals are alternatives to the Fed's narrative. When they lose control of that, then they'll lose control of this game that they're playing.
So you've got companies like Apple, Amazon, and Tesla. Their stocks are, at first glance, it would be extremely profitable to buy and hold those, because it seems like they have a large valuation, very expensive per stock price. But are these are all these companies? Are you saying that they're all not really worth the money that that people are paying for them, and the only reason that they continue to exist at that rate is because people keep getting suckered into buying that stock?
Yeah, I mean, my corporate job, I did M&A work, mergers and acquisitions, and I couldn't ever take one of these deals to my bosses because they use their own money. And so you can't justify the valuation based on the cash they're producing. If I told you got to put your own money in this as a private company, you would look at me and ask if I was on drugs, because you would never get the cash out of it that you put into it. And so that's why it's not remotely feasible. Tesla will never, ever return the cash of the valuation they are today. Apple's probably what I would say the most cash rich and profitable of the bunch, but they're a consumer goods company. So when a recession happens, they're in deep weeds. Amazon's a grocery store. Okay. They're the world's biggest flea market. And they barely generate enough cash. The whole bunch, probably Microsoft's the best positioned, and they're way overvalued. So those companies are going to really cause a lot of people, the panic will hit. And the problem is, Red, what I tell people, this is a little bit of game theory now. So, hey, could we go up 5% more? Maybe. Can we go up 10% more? Maybe. But it's more likely at some point we're going to be down 40 or 50 or 60%. And people can't afford that. Now, I'm not saying it's going to happen tomorrow. I'm not making any predictions. What I'm telling people is that you need to sell what's overvalued and you need to buy what's undervalued. And that's why we've been silver miners, platinum miners, gold miners. Those commodities are extremely undervalued. What's in the ground you could pay cash for. And that's what we look for. And then we just use our algorithm to buy and sell them, and stay in and out of them a week or two at a time. And that's how we get the results that we get, because, it's right now it's a concern to be long and asleep in the market, because you just don't know what's going to happen. You literally don't know. And there's no buyer. Red, you literally can wake up, if let's say Tehran popped a nuke, right, or threatened one, said we put one in Washington, D.C., you'd wake up to a 30% down market, because there's going to be nobody there to buffer or buy it.
Right.
And those are the things that people need to think about, which they don't. There's no hedging. None of these systems that people have in their retirement fund are hedged at all. In fact, some of them are really leveraged. And people who think they're in bond funds are in leveraged bond funds. And it's not how they think it is. Bonds aren't safe if they're not constructed the right way. So, that's my macro talk. From our standpoint at Trade Genius, we listen to all that and we just buy where the buy momentum is, and we sell where the sell momentum is, and we stay where we know there's value. And you can make plenty of money in that environment. You don't need to chase the Apples of the world, the Teslas. And here's another thing too. all the weed stocks are popping today. You know, we jumped on them too because they were extremely beaten down. But you know, we're just renting them. And you know, I shot you a note. We did a trade 2 days. You know, we hopped off after making a nice percentage gain, and it doubled from there. And so, but you don't get greedy. You just make the money you need to make. But that means the garbage is rising to the top. You know, the marijuana companies will never make any money ever. And they're being valued at just ridiculous levels.
Well, it seems like it's a lot of oversaturation too. I mean, you've got just tons of people trying to break into that market, you know, and whether it's, you know, the top end, you know, large commercial producers, or, you know, even on a local scale. In my city, when they first legalized medical marijuana, I want to say something like 80 stores popped up overnight. You know, I mean, just all of a sudden. And then you watched as they, you know, got picked off one by one. And now I think we're down to 2 or 3 in my city. So, you know, the commercial producers are probably even going to knock those off because they're going to come in with all that money behind them. But what happens when the Fed buys up all of these stocks and then something catastrophic happens and they're left holding the bags? Are they going to then bail out these companies, these worthless companies, in the same way that they bailed out the auto industry?
Yeah, you know, it's going to be like communist, communist Soviet Union, where you have what's called zombie companies. And China just went through this a lot, and they're going back to it again. You just get these zombie companies that never make any money. They're there for the purpose of the real rich raking off the top as executives and board members, Burisma. And you have the workers there just working, and they don't care what they produce because they know they're not going to get laid off, and then just the whole country will just kind of sink into a quagmire. But
Wow.
Your point on the marijuana stocks, if I could just leave it one more point, is that, look, you're right. There's no moat. There's, you know, LG just came out with basically it looks like a refrigerator, but it's a grow cabinet. And people are just going to grow this stuff in their own house. And so, you know, and all Marlboro or Philip Morris has to say is we're getting into the marijuana business, and every one of these companies will go to zero in a heartbeat because they're not going to be able to compete with that kind of distribution.
Yeah. So we have also this article from Peter Schiff that I wanted to talk about. Americans are in for a rude awakening. And I believe that it has to do with the idea that all of this stuff is going to come to pass at some point. I mean, obviously, Peter thinks there's going to be a crash. He's kind of, you know, moving us towards it. He would like for it to happen. But I mean, realistically, I mean, how far off is something like this, in your opinion?
Yeah, so I'll give you a perspective. So China, their banking system is leveraged 300% to their GDP.
Wow.
Okay. The United States, our banking system with the Federal Reserve is at 25% of GDP.
Wow, that's a stark difference.
What I'm saying is that the Fed has a lot of room to just keep buying things and putting it on the shelf to push it out into the future. So they're going to be able to buffer anything catastrophic because they're starting to now work this notion in of letting us get into the stock market. They may let a crisis happen like they did in 2008 in order for them to then gain more power to do more things. But beyond that, my personal view is that they're going to try to keep this thing going until the baby boomers start rolling off. And I think they have enough assets, a capability to do that. What I think is going to happen, though, is that we'll have these occasional panics that will probably prove, you know, Peter correct, but we're going to slowly grind into what I call an inflationary depression, where things just simply get unaffordable. You know, you see it already a little bit, right? Most people can't afford to buy a home now. Most people can't afford to get into the stock market. You know, and most people can't afford health care. So you're going to start seeing that slowly seep into other industries. You know, people won't be able to fly. You know, things that are just going to, there has to be a balance at some point. And that's the way I think they're going to try to do it, where it's going to be the frog in the water bit versus a catastrophic move. And so Yeah, so I'm not in the camp of a crash. I'm in the camp of that this is as good as it's going to get, and they're just going to try to manage it with an occasional panic here and there.
So maybe allow for a panic to happen, things to dip a little bit, and then for everything to kind of rise back up, and they can increase consumer confidence, say that we're coming out of a recession.
Yeah, and I think and this is just the book of Bob here is that I think everybody's now aligned for Trump to get reelected.
Yes.
I think everybody is scared to death of a socialist getting in charge of the country because even Tom Steyer said it yesterday at debate that in 15 minutes of Democratic control, they would ruin the country. And so, I mean, talk about a truth. And so I think everybody's now behind, and we need Trump to be elected and reelected. I mean, and I think from there, typically what happens, Red, is the first year of a second term, they force the country into recession so they can build it back up for the next election.
Mm-hmm.
So my view has always been we're going to muddle through 2020, and in 2021 we'll probably get some sort of recession. We get a stock market sell-off anytime between now and then because they typically lead a recession by 6 months.
Mm-hmm.
And then they're gonna do some reconfiguring and rejiggering, and the elites are gonna take even more power. And then I think we're gonna Japanify, and that's how we're gonna roll into the next decade.
Well, do you think that there's any danger for the Fed in allowing something like that to happen? I mean, I do think that Donald Trump is savvy enough to see when they're trying to make moves that would undermine him. If they're going to be purchasing all of these stocks and taking more financial hold on everything here in America, not just the banks, if they allow for something like that to happen, a big dip. I mean, do you think that it would speed along the president, like changing the financial system in some way? Or do you think that it doesn't matter, the Fed is here to stay, and especially now that we've got this new move into the private sector?
Yeah, I think it's going to be a battle. Most of it will be behind the scenes. I think Trump's sympathies lie with going back to more of a gold standard, some sort of anchor versus just this free-floating fiat. And so I think we're going to have to see what happens if the dollar starts to lose value. Number one. Number two is what happens when we roll into a recession. Trump's agitating today during his conversation with the signing of that trade agreement is that he was already pushing on the Fed saying you need to go negative. So he doesn't like the game that they're playing. So the Fed's saying we're going to keep interest rates where they are and we'll buy assets. Trump's like saying, screw that, drop interest rates and stay away from the assets. So you can already see the tay-to-tay going on there. Eventually the Fed will probably have to relent if the economy softens because just buying the stock market doesn't necessarily going to keep the economy floating. And so we'll eventually get probably down to zero interest rates.
So I'm actually looking to buy a house. I've been here for 10 years. I fixed it up. The value's up a little bit. I'm hoping that the market doesn't crash, and looking to get something that fits me a little bit better. So let's say that the Fed goes to 0% interest rates or goes to negative. I mean, how does that affect the average American? I mean, they're not going to pay me to borrow money for a new mortgage, are they?
They did it in the Netherlands and they did it in Denmark. People
Wow.
actually got paid. You have to understand it's really relative, right? So you may get paid on the mortgage, but it's coming out of somewhere else. So yeah, and that's what it. In fact, Denmark and I think Netherlands still have negative rates. I think the mortgage rates got to zero. So yeah, it's absolutely possible. And Trump made a point which on its face makes sense. Why shouldn't we go negative on the rates? That's really the way out of the debt crisis is basically to reduce the debt level. Mm-hmm. So Trump's saying, let me borrow and I'll pay it back. I'll pay less back over time. And you basically, that's really taking the money out of the wealthy.
Yeah.
See, the wealthy absolutely want inflation, okay, because they don't want to work hard for their increase of their assets. Depressions and deflation actually help the poor people perversely because things cost less. And when you're at the lower end of the salary range, it doesn't get as compressed as somebody at the high end of the range. Or if you don't own any assets, you don't care if the housing prices crash. It's just going to make it more affordable for you.
Right.
So at some point, physics takes over, and that's going to happen. I think Trump's trying to preempt that, be on the front end of that, keep the pressure on the Fed, because if the Fed falls behind and we run in these situations like we did 2008, Trump will be merciless with them, and they know it, and they see how effective he is in mobilizing public support. So they couldn't pull a George Bush on him like the Fed did to George Bush Sr. and threw him out of office because they wanted to bring in Clinton. Is that they tried to pull that on Trump last year and it didn't work, and Trump's going to always stay ahead of them. For you, yeah, rates are going to come. They're going to keep coming down. They're talking about we're not going to change anything this year. I'm pretty sure one of our talks one of these months is going to say, "Hey, Bob, they lowered interest rates. What's up with that?"
Cool.
And but you're going to, depending on where you live, you're going to be fighting demographics too. So you better, if you live in a place where people are moving to, you'll be okay. If you live in the Northeast or upper Midwest, then I wouldn't be advising buying a home.
Really? How come? Tell me why.
People are leaving. They're getting older. They're trying to downsize. Kids can't afford to go in. I'll give you an example. In my own personal life is that I own a home here in California and I own a home in Pennsylvania. And I bought them both at the same time in 2006. My home in California has doubled. My home in Pennsylvania is up 2%. Okay. Wow. It's just that, and my home in Pennsylvania is bigger than the home I have in California. My home in Pennsylvania sits with a farmland behind it. Gorgeous. With more acreage, and it's worth 25% of my home in California.
That's insane.
It is insane. And the point I'm making here is that where there's money and people, it supports the housing market. Where there isn't money and people, then it's not going to really do anything. Now, I own a home in Pennsylvania for other reasons than investment. So I'm not. That wasn't my point of saying, "Oh, can't buy houses."
Sure.
It was for family purposes. But it was ironic to me that when I checked on it, I just laughed. I told my wife, I said, "Wow, hey, we're up $11,000, in 14 years, in Pennsylvania and California, they just fly." And that's not California. California is going to start struggling now too. So it's going to be, you have to look at migrations. It's going to be the Intermountain area. It's going to be the Southwest that are going to do pretty well. Texas is going to do well. Florida booms and busts because, they overbuild a lot there. But Northeast, they're losing population. People are getting older. People are downsizing. People are going into condos and apartments, and you don't need all the room when the kids are gone. So,
right.
So that's what you have to look at beyond just the interest rates on it as well. Plus, Chicago, in Illinois, I know we're tangenting, but I think this is interesting stuff. People will like to listen to it. Is that in Illinois, the price of homes have actually gone down in price over the last 20 years because Illinois keeps jacking up the property values. And so people could only afford so much home. When you go for a mortgage, they look at your PI and your TI, right? Mm-hmm. And if your T and I keep going up, your P and I better be going down. And that's what's happening in Illinois, is that people bought homes in 1996 or they're worth less than they are in 2019, 2020, because they tripled the property tax ratios. And so that's something what governments are going to start doing too. They're going to start grabbing property taxes to fund their state and local government. So there's a lot of moving parts that people really need to think about. When you buy a home, I love the stock market over property investing, because if I don't like what tomorrow looks like, I'm out tomorrow.
Sure.
If you buy a house, hey, it might be 6 months before you get out, if you can get out at all.
If 6 months, I think it's a lot longer usually.
Yeah. So these are just interesting things, and people need to start thinking about those things. And that's why I always say the stock market's the best place to make money.
Yeah. I've definitely heard that. Well, listen, Bob, we are out of time, my friend. So what nuggets of wisdom would you like to leave the audience with? Yeah.
So, always worry about an event that's likely to happen, and don't worry about the catastrophic events. I think, the Fed and Trump and the power elite are going to try to muddle us through the next 6 to 9 months. get them elected. So you probably have that kind of timing to get yourself organized. Don't worry about anything else. Iran's off the news, if you notice. Impeachment's off the news. China's off the news. You know, everything now is off the news. The only thing that's really going to matter is what the Fed does. So people watch the Fed. If the Fed screws up, then what I'm telling you is going to be wrong, and then things are going to get really, really nasty. If the Fed keeps the balls in the air, they'll probably be able to keep it going here for some time, but things will get a little bit more volatile. So that's what I'll leave you with.
All right, Bob. Well, thanks again, man. I love it when you're here. We always have such great conversations, and I really appreciate you stopping by again.
Yeah, hey, thanks, Fred. Thanks for having me. Hope I can talk to you next month.
Anytime, brother. We'll talk to you then.
Bye-bye.
Hey guys, it's Red Pill. Just one more thing. I just want to say thank you so much to everyone who has taken the time to support this channel. If you'd like to see some ways that you can support the channel, you can always check the show notes in the pinned comment of this video below. Whether you like, whether you share, whether you make sure that your notifications are on, any way that you support this channel means so much to me. I could not be doing this without you, and I could not do it without your help. Without people like you, this channel would not exist, so thank you so much to everyone for all of their many means of support. Don't forget to check out the merchandise store that is also in the pinned comment, and I will see you guys next time.